In this lecture, we're going to add government to our circular flow model. To make things easy on ourselves, let's get rid of all the artwork and let these boxes represent the household and the firm. There's no need to label the flows, you already know what they are. We can insert government into our circular flow model just by adding this box. You already know the role that the government plays in the economy, both the positive and normative justifications. Now let's hook the government up to the rest of the circular flow. We'll start with this flow, from the household to the government. We can label this flow personal taxes. We'll label that in red because it represents a drain on spending in the economy, which, as you know, would slow it down. The federal income tax system is a progressive system. That is, households with higher incomes pay a larger proportion of their incomes in taxes. A regressive tax system would have lower income households pay a larger proportion of their incomes in taxes. Suppose, for example, that household A earned $100,000 a year and paid $25,000 in federal income tax. Obviously, they'd be paying 25% of their income in taxes. Suppose, on the other hand, that household B earned $50,000 per year and paid $20,000 in federal income tax. Household B is paying 40% of their income in taxes. So even though the household with the higher income is paying more taxes, this tax is regressive because the lower income household is paying a larger proportion of its income in taxes. A few examples of a regressive tax would include a tax on necessities, such as food and medicine. And that's because low-income households must spend a larger proportion of their income on necessities and less on other goods, such as luxuries. Higher-income households can spend a larger proportion on luxuries and a lower proportion on necessities. A sales tax is another example of a regressive tax. A low-income household exposes all of its income to sales tax because it must spend it all, can't afford to save. A higher-income household, however, can shield some of its income from sales taxes simply by saving. This is why food and medicine and other necessities are not subject to sales taxes. By exempting necessities from sales taxes, it makes the sales tax less regressive. And then there's the FICA tax, F-I-C-A, Federal Insurance Contributions Act tax. This is the Social Security tax that you pay. The Social Security tax is about 6.5% of your income. And you're going to be paying 6.5% of your income all the way up to $142,800. However, after that, if you are fortunate enough to earn more than $142,800, none of that income beyond that is subject to FICA tax. So a person earning, let's say, $500,000 a year is going to pay a far smaller proportion of its income in FICA tax than a person making, say, $50,000 or $60,000, $100,000, or $140,000 a year. The federal income tax, however, is a progressive tax, and it is made so by the fact that higher increments of income are taxed at a higher rate. Let's divide your income into a number of increments. The rate that is applied to each increment, known as the marginal tax rate, increases as the marginal tax bracket increases. The term marginal simply means incremental. Let's say that your income for the year 2021 is $100,000. And let's also suppose that in the IRS tax structure, the first increment is $25,000. The first $25,000, according to the IRS, the Internal Revenue Service, is taxed at 10%. The next $25,000, The second marginal tax bracket is taxed at 20%, a higher rate. Now, what these marginal tax brackets are, whether they're $25,000 or $10,000 or $15,000 or $30,000, whether they're all equal from one bracket to the next, I don't know. And it doesn't matter here. If you're interested, you should consult your tax accountant. The next $25,000 increment of income, the marginal tax bracket, is taxed at 30%. Now keep in mind that that first increment of income, that first $25,000 increment, is still going to be taxed at 10, not 30. The next $25,000 is still going to be taxed at 20. It's the third increment of income alone that's going to be taxed at 30%. And the rate that applies to the final tax bracket, the final one in this example anyway, is 50%. Pause the video for a second, do it right now, and compute how much this person will pay in taxes. If you said $27,500, you are right. It is those increasing marginal tax rates that make the federal income tax a progressive tax. This table consists of data collected in 2016. Although that's 5 years ago, the numbers aren't too significantly different today. You can see the top 1% of all earners earned 20% of all income, but paid 37% of all taxes. The top 5%, that would be the top 1% plus the top 2 through 5, that light blue one there, the top 5% earned 35% of all income and paid 58% of all taxes. Now the bottom 50%, over to the left, the salmon or the pink color boxes there, the bottom 50% of all income earners, they earned a total of 12% of all income and paid 3% of all taxes. This shows just how progressive the U.S. federal income tax system is. It's also important to know that taxes such as sales taxes, property taxes, the estate taxes, they are collected by state governments, not the federal government. The flow from the government back to the households we will call transfers and services. Transfers are transfer payments. These are payments from the government to the household that are not in return for productive services. These include things like welfare payments, unemployment compensation, Social Security, and Medicaid. Services include public goods like national defense, safe streets, infrastructure, the court system, garbage collection, environmental protection, public schools, and so on. The flow from the firm to the government we can call business taxes. Now there's only one kind of firm that pays an income tax, that's corporations. But other firms pay all kinds of taxes. For example, payroll taxes, such as the FICA tax. The employee, that'd be you, pays FICA tax of 6.2% for Social Security and 1.45% for Medicare, but your employer must match that. Plus, the employer must also pay the FUTA, the F-U-T-A, federal unemployment tax, and that goes into the pool for unemployment compensation. Now that accounts for 6% of your salary. And so right off the bat, when an employer hires you, that employer is going to have to pay 13-14% to the government. Before we move on, let's talk about the legal forms of business enterprises. The most basic form of legal enterprise is the sole proprietorship. This is a business with a single owner. Sole proprietorships can be risky because the owner is subject to unlimited liability. That is, suppose the business, we'll call it Joe's Widget Company, runs up a debt of, say, $500,000 to its suppliers, but it can't pay because it's not getting any revenue. Customers are not buying its product. Either they don't like it or Joe's charging too much. That owner, Joe, is going to have to pay that debt out of his own pocket, even if that means selling his house, his car, whatever assets he has. And if he can't do that, he'll have to declare personal bankruptcy. Now, the sole proprietorship is not taxed on its profits. The government doesn't tax the profits of Joe's Widget Company. The profits are taxed as personal income to Joe. And that's because in the eyes of the government, that firm, Joe's Widget Company, doesn't even actually exist. The name Joe's Widget Company to the government is simply a name that Joe gives to a system of resources, land, labor, and capital, that provides Joe with revenue. If you slipped and fell in Joe's Widget Company's warehouse, who would you sue? Joe's Widget Company? No, because that doesn't even exist. You'd sue Joe. Another form of business enterprise is the partnership. This is a business with more than one owner. Every rule that applies to the sole proprietorship also applies to the partnership. However, it's important to note that each partner is responsible for the business decisions of the other partners. Let's suppose that Joe needs some money to pay those suppliers. So he makes a deal with Jim. From now on, you can have half the profits of the firm if you pay me $500,000. Jim agrees, so now they are partners. But suppose that Jim uses the company's checkbook to book a vacation in Cancun. That's a stupid decision, but is Joe liable? Yes. So, if you ever start a company with a partner, make sure you know them well and trust them. A third legal form of business enterprise is the corporation. The corporation is significantly different from the other two because corporations are recognized as legal entities by the government. As such, corporations, as a legal person, must pay taxes on its profits. Recall that the proprietorship and the partnership, because they were not recognized as legal entities, did not themselves pay taxes on their profits. Those profits were taxed, however, but as personal income to the owner or owners. However, the corporation itself must pay taxes on its profits. Unlike the other two forms, however, the liability of the owners are limited. Even if the corporation goes deeply in debt, the owners are not responsible. The most that they can lose is the amount that they originally invested. Corporations began when it became necessary to raise a lot of money, more than one person could raise by himself, to finance major projects. However, because it took a lot of partners to pool their money, it was impractical for each investor to be responsible for the business decisions of the other investors, as it is in the case of a partnership. That risk dissuaded potential partners from investing. So, in 1600, the first corporation was formed to finance the East India Company. In this structure, the maximum any investor could lose was their original investment. This concept is known as limited liability. And this explains why today America's largest companies are virtually all corporations. You might wonder then, why don't all firms incorporate? That's a pretty good deal, limited liability. The answer lies in the fact that corporations face the problem of double taxation. That is, the corporation itself must pay taxes on its profits, and when it pays out what's left of its profits to the owners through dividends, the owners must then pay personal taxes on that income. If you want to start a business, avoiding double taxation might be worth the risk of exposing yourself to unlimited liability. The last line that connects the government to the rest of the circular flow represents subsidies and purchases. A subsidy is a financial incentive that motivates a person or a business to act in some particular way. Suppose, for example, some farmer, we'll call him Farmer Brown, has a piece of land on which he can grow 100 bushels of corn, which he can sell for $5 a bushel, 100 bushels of tobacco, which he can sell for $6 a bushel, or 100 bushels of wheat, which he can sell for $4 a bushel. Assuming that the cost of raising each of these crops is the same, he can make the greatest profit by planting tobacco. It's in his self-interest to do so, and he's doing exactly what society wants him to do with that land. Because, as indicated by the price mechanism, society values tobacco more highly than it does the other crops. But the government sees that he's growing tobacco, and being aware of the negative externalities associated with tobacco consumption, like self-inflicted diseases clogging up the hospitals with sick people, tobacco butts all over the place, etc., it wishes to convince Farmer Brown to grow something else. Well, Farmer Brown politely declines, explaining that he's got kids to put through college, he's got other expenses, blah, blah, blah. Now, being that it cannot legally prevent Farmer Brown from growing tobacco, it must use some other method. And nothing works better than a financial incentive. If the government were to pay him $2 for every bushel of corn that he grew, it would now be more profitable for him to grow corn. He'd collect $7 for every bushel of corn that he sold, $5 from the customer and $2 from the government, which would now make corn more profitable than tobacco. That $2 was a subsidy that motivated Farmer Brown to grow corn rather than tobacco. But notice that this line from the government to the firm is also labeled purchases. What does the government purchase? Well, it'd be much easier to explain what the government doesn't purchase. The government purchases equipment with which to provide public goods like national defense and safe streets. The government buys jet planes from Lockheed Martin, firearms from Smith & Wesson, garbage trucks from General Motors, police cars from Ford, computers from IBM, and so on. So now we have three sectors in our circular flow model: the household, the firm, and the government. Eventually, we will add two more when we get to Module 4, the macroeconomy.